We start today's market talk. Last few years, we have seen unprecedented euphoria, taking valuations in certain pockets of mid, small caps, and PSUs to unrealistic levels, quite divergent from the earnings. The phenomenon of a rising tide lifting all boats may not get repeated at least for some time now. Hence, well researched ideas with strong earning visibility will get rewarded. Hence, the flavor of the season approach to investing may not work. Hence, investors should have a bottom up stock picking philosophy to find winners. Coming to market outlook, political risk, which many had thought was behind the country, is back with a bang. The spike in India VIX over the last few months reflects that uncertainty about direction of future policy has gone up. Big question is how much policies of fiscal prudence, good macroeconomic management, and financial stability will continue. Markets are presently priced to perfection for a business-friendly economic policies. Even if there is no change in earning growth, there should be some lowering of high valuations. Before the poll results, markets had discounted high growth rates, PLI, China plus one, revival in capex, strong balance sheet of companies and banks, greening of economy, and everything positive about Indian economy. So everything was in the price. There should be some dent to the optimism of this market, and valuation should lower till there is a confirmation that nothing has changed. Will the new government give the same importance to infrastructure building, or will we have competitive populism? There is a big risk of populist bias to boost consumption and setback to tough reforms. FY25 budget estimate had a fiscal deficit of 5.1%, 5.1%. Now that will have to be seen when the budget comes in now. Household consumption growth is trending lower since the pandemic, and GDP growth is holding up due to investments and government expenditure. Manufacturing push will continue as there is a requirement of job creation, and RBI's transfer of surplus should reduce fear of fiscal slippage. So this factor has to be watched carefully. Valuations of stocks in railway, necessity of boosting private consumption and employment. There is a perception that unfavorable verdict was due to rural distress. Steps will have to be taken to drive real sustainable income growth for rural India and the bottom half of the population. Now, valuation of stocks in railway, defense, and electronic manufacturing have run away ahead of fundamentals. If you see, railway order books are reducing in railway stocks. Most of these stocks are in a bubble because last leg of the rally in them was influenced by market sentiment and liquidity rather than fundamentals. These stocks are highly vulnerable to profit booking. Stocks like RVNL, IRCON, BDL, Data Patterns, Cochin Shipyard, etc. are seeing slower revenue growth and higher valuations after assuming that they will double earnings in the next 2 to 3 years. Even in EMS, except for Dixon, Keynes, PGEL, and Cyan DLM, revenue growth is slower in most of the players. Strength of this bull market has driven the valuations of these stocks way ahead of fundamentals. So there is a time to be careful. Now, demand for affordable housing means policy support will continue, resulting in growth opportunities for housing finance companies. Housing finance should be a sector under focus. Affordable housing finance will be in focus as it addresses the need of bottom of the pyramid. Stocks like Home First, Aadhar Housing Finance, India Shelter will be in focus. Recovery in consumption demand-driven sectors such as FMCG, consumer durables, and automobiles should also be seen. Supporting consumption through measures such as increasing rural employment guarantee, increasing minimum wages, social support programs, and higher MSP, etc., would be seen. Measures that put more money in the hand of consumers through tax cuts and others will benefit FMCG companies. FMCG companies, if you see, the volume growth has been sluggish and consumer staple companies have underperformed due to inflation and competition from unorganized players. But stocks like Dabur, Imami, HUL, etc. have already moved around 20% from their lows. Uh, Talking about India's 10-year yield, now based on the election result, the yield spiked. It had reached around 6.94. It spiked back to 7% plus level. Now it has cooled down slightly. It is likely to remain range bound in the immediate term until there is a decisive direction to emerge after a full budget is presented and people are sure about the fiscal prudence being followed by the government. Inclusion of Indian G6 government securities in JP Morgan government bond index will start from June onwards, and it will be staggered 1% every month from June 24 to March 25 to the total level of around 10%. So that should be a decent trigger for this. Now, talking about US, the stock indices fell on Friday but finished higher for the week as US non-farm payrolls rose more than expected in May, dimming hopes for interest rate cuts anytime soon. US Treasury sold off and dollar strengthened as expectations of rate cut in US were pushed back after data on manufacturing and job opening was softer than expected. Nvidia was up 10% last week, topping 3 trillion market cap. So if you see here, US 10-year bond yields, which were trending down, this is a weekly chart, trending down, spiked up back on Friday up to around 4.5% level because again the rate cut thing was pushed back. So this thing will continue till the time there is a clear decisive move. Similarly, the dollar index again spiked back to 104 and all that. So once the dollar index moves up, it affects the commodities and gold and other things. Brent crude came down. This is because OPEC Plus gave details of production cut schedule till end 2025. But crude prices struggled due to bearish forecasts, reducing risk premium because things are stable in the Middle East, and the cuts which OPEC is bringing out are being made up by countries outside the group like US, Canada, and Brazil. Gold declined. It has come below 2300. So it should test its 20 EMA now as the dollar strengthens and all that. And I think people are booking profits here. Nasdaq, as I have brought out, led by Nvidia, made a fresh high. It's above this rising trend line, but it had a small correction subsequently on Friday, but still it is strong. Copper declined. Again, profit booking is taking place. So if you see here, it reached and retraced from the long-term high it had made. So this is its all-time high, and it retraced from there because the price subsequently becomes unviable. So it can't just keep rising, and it will impact because the supply, people start selling more, supply comes up, hence the demand reduces and then the prices decline. India VIX, it's interesting. It had spiked. This is a daily chart. So if you see, it had spiked, but then it corrected, and it corrected in a big way, and it came down to around 16.88 level, where it had formed a doji on Friday, but it had risen, made a fresh high of around 24 plus, and then has corrected, though on sometime it had gone to 26 level also, but it is now correcting. So we'll have to see. That will impact the volatility. Now, if you see, this is a Nifty weekly chart. You can see from here, it has made a big hammer. So the trend seems to be bearish, though Nifty has reclaimed 23,000. The fear and panic of 4th June has been negated. Ability of domestic investors and institutions to absorb any shock from FIs has been demonstrated. And market is veering around the view that India story is still intact, and that is why there was a recovery from the low on Tuesday. Exit polls. Now let's see the daily chart. So it is very interesting. So if you see here, this was the exit poll high, and then on Tuesday the market corrected. Nifty corrected, came down and took support at 200 EMA, but closed above that long term or last few months we have seen a support at 21,800. And then it opened at that level on Wednesday and then bounced back. So we had 3 green candles. And yesterday the Nifty reclaimed the 23,000 and is just short of making a fresh all-time high here. And if you see here, this is what I was bringing out. This is a daily chart, but this I want to show the RSI. RSI momentum index never went below 40. So it showed that despite such a steep fall, where the Nifty was about to get into a lower circuit, still, despite that, it was not oversold. Hence, it gave some semblance that there is some strength. And if you see here, it has never gone below 40. RSI has never gone below 40 on the daily charts. Now, this is the hourly chart. So if you can see here, opening and high on Monday, then a big dip and a big red candle, and then a rebound. And then from there, it has rebounded till Friday and subsequently reached the similar levels. Now, after the exit polls was a huge disappointment. And nothing can damage the sentiment more than if you see your profits going out. So on Tuesday, we nearly had a lower circuit on Nifty and Bank Nifty. And some of the popular stocks like PFC, REC, Vedanta, and Adani Group stocks were down nearly 25%. Traders suffered MTM losses, but the market recovered the entire loss over the next 3 days. And we are at similar levels on as we were there on Monday morning, but without the high conviction and lesser participation. So what has come out is that 21,800 is the value area support. And there's one more interesting thing which I wanted to show. If you see here, average length of the correction for the last few months has been 5 to 6 sessions only. So after 5 to 6 sessions, the market tends to recover when it goes down to that value zone of 21,800 or a decline of 900 to 1,000 points. But on Tuesday, we saw a 2,500 points correction in a single day. So be alert, because this high could be a bull trap and we may see multiple swings within this range of 21,800 to 23,000 plus during this month. So one has to be slightly careful with these issues.
Tarun, I'd like to give a practical example of my being trapped.
Yes, sir.
Okay. On Tuesday, when there was such a big correction and all, what happens is that the mark-to-market margins are continuously going up. I mean, they become more than 10 times the margin of the normal margin also, because the VIX also continued to go up. So that day, I had a margin call of about 2 crores. Now, obviously, and I had a court date that day. I was out. Okay. So obviously, I defaulted on the margins, and in the evening or next day, I got to know that I had a loss of 52 lakhs in the on that particular day for 1 day loss. Although in the previous day I had made about 13.5 lakh, but this is just to warn people who are doing option selling, that this kind of a trap can really kill you.
Absolutely. Now, let's go ahead. Nifty Bank, similarly, it went down on the weekly chart. Again, same kind of a hammer has been made. It made a fresh high, but then has corrected. And on the daily charts also, it went below the 200 EMA, and this was about to get into a lower circuit. Definitely, there was just few points left, and then somehow it recovered, and it has closed at around 49,800. So we'll have to watch this now very carefully, because this is relatively weaker as compared to Nifty. Nifty is showing more strength. So all upside moves should be seen as a selling opportunity rather than any breakout buy opportunities from here. FI shorts are getting covered, but decent size is still left over. A lot of new buying from retail has come, which is, in my opinion, not a very strong signal, because retail is very, very volatile investment or trading. So remain nimble, avoid aggressive long trades, and take quick profits on longs. Also, confine trades to intraday, then swing trades. Uh, the I have spoken about the RSI part not going below 40, so that should give some hope to the bulls. This indicates the trend is bullish and a big fall is ruled out. Now we see HDFC Bank. This is a daily chart. It has gone above the decline and trading now above all the moving averages. Once this 1600, from 1600 it turned back, because this is that gap zone. This is the gap zone from where it had fallen. So once it has to cross 1600 to gain some more strength. Reliance, if you see here, this is a weekly chart. Retraced from this supply zone which is there. As I had indicated last week also, and it retraced from there. It goes multiple times. It goes there and then retraces. It took support at its 50 EMA, but then bounced back and recovered. The stock which was in strength last week was Hero Motocorps. Is a direct play on rural consumption, and it showed a lot of strength, made a fresh high. So watch this. There is a thing about Ather Energy also, there is an IPO likely. Midcap index, similar chart, made a fresh high, then corrected. So, but it showed strength. Same with small cap index, same fresh high, and then it corrected. So the sentiment was not only stirred but shaken also last week. Now I'll cover three stocks. These are some, what I'm doing nowadays is I'm going into less volatile and less stocks where you're less likely to lose money. So I'm trying to reduce the risk, and that is what I was doing last time and now also. So first stock today is Pitti Engineering. This was founded in 1983, and it's India's largest and most reputed manufacturer of electrical steel laminations, motocorps, sub-assemblies, die-cast rotors, and press tools. It's doing a merger of one of its subsidiaries with itself, focus on increasing share of value-added products, and increasing demand in international business are likely to aid the company's efforts to increase its market share. Company aims to increase its market share to around 25% in the next 5 years, which if achieved will lead to 3x of volume growth. While value-added products and exports are high-margin products, rising volumes and capacity utilization are likely to improve operating leverage as fixed costs remain broadly the same, driving margins higher. It's ramping up the use of CNC machines. CNC is computer numerical control. So basically all this precise machining is done by using computers for machining products with high accuracy. It aims to achieve a 25% market share over the next 5 years, while its focus is on efficiency improvement and capacity addition. It is actively seeking opportunities to acquire businesses that complement its current offering. It has already announced the acquisition of Bagadia Chaitra Industries Private Limited, expanding its footprint in South India. So once they complete the merger of Pitti Casting Private Limited, which is one of its subsidiaries, this Pitti Casting Private Limited makes high quality casting in grey iron, ductile iron, low carbon, and alloy steel grades. Post mergers, the revenues will grow and operating margins will be higher. So this is one trigger. Uh, let's see their earnings. So FY24, they're after FY24, they are expected to grow around 50% in FY25, and ROE and ROCE are all expected to improve, and it is expected to do a EPS of approximately 47 in FY26. So even if we take 45 to 47 at if its traditional PE is 30, so even if you give it a PE of 25, it takes it to a level of 1100 to 1200. Now let's see this uh, profit and loss account. So they're expected to do big growth of revenue in FY25, and then is likely to continue in FY26 also. Similarly, the operating profit, etc., is also expected to grow, and operating margins are remaining stable. EBITDA is growing, and profit after tax is expected to grow 45% this year, FY25, and then 26% next year. So EPS, as I've already discussed. Now, what is going to happen is that there is going to be increase in number of shares. So that equity dilution will be there because of post this merger, but it is not likely to impact their profits that much. So the earnings are expected to remain good only. ROC, ROE are not coming down. Asset turnover is 1.6. That is good because that shows that efficiency with which the company uses its assets to produce sales. Working capital days are coming down, so that means the requirement of debt is going down. And if you see here, this Pitti Engineering has had a gradual rise along the 20 EMA, so it is not getting overbought, and it went and tested that 20 EMA on this week and then bounced back from there. So every dip is a buying opportunity for this company because it's expected to do well. The other stock is Natco Pharma. Why I'm covering this is because the certain drugs which were in news last week, this one also manufactures this, because you must understand the companies which are doing the generic business in US and rest of the world. They have a distinct advantage over the others which are making or discovering new drugs. Now, Natco's Q4 FY24 results were above estimates on account of higher than expected growth in export formulation driven by Revlimid supplies. Now, Revlimid is used for treating cancers. So it's a very popular drug, and it is a lot of companies are doing it, so they are also doing it. Management guided top line growth of 15 to 20% for FY25. Crop Health Sciences, which is one part of their business, is expected to be a rupees 300 crore business in the next 3 years. It's approximately 100 crore right now. Export revenue CAGR of 14% over FY24 to 26, including Revlimid estimates in the US. Now, this is interesting. They're also working on semaglutide and olaparib, some of the other large opportunities that will drive growth beyond the Revlimid opportunity post FY26. Now, you must know semaglutide is used to treat diabetes. It's basically a diabetes drug, which is also being now given to reduce obesity. So it is popular everywhere. Even you heard Biocon is working on that semaglutide also. So the same thing. And olaparib is to treat advanced ovarian cancer. They are doing capex of 300 to 350 crore for FY25, which will be utilized for maintenance capex and expanding the capacity of existing facilities. In the US, the focus is on complex generics or sole first to file products, which are more profitable. During the quarter, good performance was achieved in Canada, Brazil, and the rest of the world business. In FY25, company plans to expand its business in Saudi Arabia and Egypt. So now if you see here, fourth quarter, year on year, they saw 19% revenue growth, and quarter on quarter, they had 40% revenue growth. Similarly, the PAT also was up 40% year on year and 81% Q on Q. Gross margins were up 1543 basis points, that is nearly 15%, and EBITDA margins were up nearly 8.78% or 878 basis points. So there is a major improvement. Now, they are expected to grow approximately 10 to 15% over the next 2 years in terms of revenue, and same improvement will be there in their profits also. This is in millions, so roughly 1780 crores of profit in FY25 and 2117 crore of profit in FY26. So rest of the things are under control. Now, if you see here, they are expected to, if you see, the gross profit margins are improving, EBITDA margins are improving, and net profit margin is expected to be around 39.7% in FY26. Cost as percentage of sales is declining, and other costs are also declining. Expected EPS is 118 in FY26 and 100 or 99.5 in FY25. ROCE, ROE are stable in 20% plus. So if you see here, growth rate, revenue growth rate around 16 to 15%, steady EBITDA growth rate 26 to 18%. PAT growth again decent, 28 to 18%. So if you see here, if you see their quarterly revenue mix, export formulations was the one which was a key thing. So the total revenue of 1100 crores, 954 crores were from export formulation, which grew 34.6 times. The crop health insurance was negative revenue because I think because return of stock from a super stockist due to poor crop season. So that was it. But focus is now on niche drug filings. If you see here, crop health insurance in FY24 still they have done 108 crore, and they are planning to do around 300 crore in FY25 and FY26. So now if you see the stock, after February it had a rise, and then it has been consolidating, and then on Friday it rose to 1082 odd, but it is still at 10-11 times FY25 and FY26 earnings, so relatively not very expensive stock. Seeing the lesser risk to earnings and valuation. The last stock today is Muthoot Finance. Gold loan AUM increased 20% year on year to rupees 75,800 crore in Q4 due to productivity uptake of rupees 15 crore per branch. That is 15% year on year. Gold tonnage increased 4% year on year to 188 tons. It increased liability raising from banks and CPs, then focusing on NCDs. So calculated spreads, that is the difference between the cost at which they are borrowing and the cost at which they are lending, increased 70 basis point Q on Q to 10.2%. So which directly impacts their profit. Is the lowest cost gold financer in India, and its expense ratio is forecast to remain at 3.5% of AUM through to FY26. Expect the company to maintain market leadership in NBFC gold financing and yield steady state return on assets of 5% plus. Management continued to guide for gold AUM growth of 15%, and there could be some degree of upside to this guidance with rally in gold prices. The management is increasing digital strategy across products. It is also increasing focus on microfinance, home loans, and vehicle finance. The regulation of no cash disbursement in loan higher than rupees 20,000 will lead to direct credit to bank account. However, the management indicated that digital transfer will not lead to customer attrition. Now, if you see, this is their quarterly performance. Now, the things to see out here is that yields, cost of funds, NIMs, spreads, and cost to income ratio are all improving. So this is directly going into profit after tax. So this is a key issue. They did higher provisions which impacted their profits, but still, the profits were still higher. And so these are the things which have to be seen in terms of their performance. So if you see year on year, all these parameters are lower. So if you see here, they are seeing around 20% increase in net interest income and other incomes, and profit after tax, etc., is expected to go around 20% now. This is in millions, so it will be around 5,000 crore in FY25 and 5,800 crore in FY26. Now, if you see the key ratios, this is important. NIMs are very high, but it is not going to go higher than this 11.5 or 11.6 levels. That earlier levels of 12%, etc., are now not going to be there. The cost to income ratio is coming down. ROA is very high, around 5.6. The banks do, best of the banks do around 2 return on assets. ROE is 19.2%, and NPAs are under control. So provisions are increasing. So it's not a big problem for them. So if you see the growth rate, net interest income is expected to grow 20 and 16%. Profit before tax is also expected to grow in the similar way, and AUM is also improving, and it's expected to do an EPS of around 146 rupees in FY26, and book value is 822. So remember this. So it is presently at 2 times book value, and it can easily trade at 3 times book value also. Seeing the growth in earnings and all those issues, you can compare it with Bajaj Finance, which is at around 5 or 6 times price to book. So Muthoot Finance, if you see here, the AUM is rising, and its rise is around 20% year on year. The asset quality has improved, so the GNPAs are going down. PAT, profit after tax, again is improving, and it is going up to around 15 to 20%. And AUM mix is basically more south-based, and it has remained stable. So south, then north, then west and east. So they are more popular in certain parts of the country, where obviously there is more gold also. Gold stock of theirs with them has gone to 188 tons over this quarter only, and productivity uptick from per branch has moved up to now 15 crore. So they are able to gain more from each branch as such. So now if you see the price action, it has reached around 1780, which is at 2 times price to book. So in my opinion, over a period of time, over a year or so, you may see it at 2400 odd level also. Because the risk is less, and the stock is showing steady growth, and the gold prices should remain high. So that is the major trigger for this stock. And also the next quarter is going to be good, and that I think is getting priced into the price because of the restriction on the gold loans of IFL Finance and all that. The weakness is that this business is now getting crowded because everybody is doing gold finance, because there is it's a secure business, and lot of requirement for gold loans is there. So all NBFCs, all banks, everybody is doing gold finance, but they are the leaders in this. So I have finished. We'll take questions now.